All right, traders, I'm going to be doing an updated price action analysis on the SPY. This is going to prepare you to trade the best setups at the best prices heading into the rest of this week. We're going to be discussing the key micro levels to be trading at along with the key macro levels. This will give you a much better understanding on when to be short biased, when to be long biased, how to identify when the bulls or bears are in control of this key level, and what levels to be trading at, where to set your mental stop losses, and where to set your profit targets. Let's get straight into the analysis. This is going to be a good one. So in terms of the SPY, as we have been discussing, it is having multiple gap close reversals to the downside. There was a gap to fill above that we had pointed out a couple days ago at 410.97. It partially filled the gap, started to have a reversal from the daily chart. And then there was a new gap to fill right here at 407.38. It closed that gap, started to have a reversal. So in terms of today the SPY ended up gapping down. So it is in the continued process of filling those gaps. And then once those gaps fill that are waiting to fill above, it has a reversal and it starts to downtrend within time to try to fill this gap all the way down at 374.13. So this is what I want you to understand about the SPY right now. The SPY is moving up during extended hours. It is trying to gap up. It's having a small move up. It's at $400.50 right now. It's having a $1 gap up during extended hours trading session. These are going to be the key levels, and this is what I need you to understand. So in terms of the SPY, this is critical. We're going to be discussing the micro targets right now. Let's go over the micro here. This is very, very important. So in terms of the micro price action, that's the short term. We're going to get into the macro, the more longer term here very, very soon. But this is what I want you to be aware of. There is a gap that is waiting to fill above at $406.91. As you can see, the SPY recently gapped down and it rocketed back up to fill the gap. In terms of today, it did not rocket back up to fill the gap. It ended up cracking $400. And in terms of that key $400 support, you can see there's some previous resistance right here at 397.30, and then there's some also previous resistance at 396, and then there's a lot of key support slightly under $393, right? So in terms of this make it or break it levels, this is what I want you to be aware of. In my opinion, the bears will remain in control for the short term being for the micro, and the gap will not fill for the very short term at 407 if, the keyword is if, they can maintain under and turn 402 into resistance, this level right here. This 402 needs to react as a resistance, and we need to see a quick crash for a green to red move tomorrow under $399.59. If the SPY can turn 402 into resistance, and if it can crack 399.59, the bears will remain in control for the micro and the gap will not fill. And if it does turn 399.59 into resistance and starts breaking down, that will be our key confirmation that we're going to start to see a pullback to 396 to 393 range, right? So in terms of the bears, to remain in control, they need to stay under 402, but more importantly, for true strength, they need to quickly crack under $399.59. Now, let's discuss the bull theory. So in terms of the bulls, they need to stay above $399.59 to $400 for true strength, and for this gap to fill quickly into the rest of this week at 406.91. The bulls need to push above 402. What will send SPY to fill this gap? If it stays above the previous closing price at 399.59, and if it breaks above this 402.60 and pushes above and forms a floor and forms support. If the SPY can push above that 402.60, start breaking out, start forming support, you will see a similar move like this to start to uptrend to fill the gap. See, this is the key. See the low of this 30-minute candle at 402. If that low, 402, can turn into support instead of bearish candlestick, bearish wick, lower high, right? Then it's going to start to uptrend instead of downtrend. It will start to uptrend to fill the gap. So in terms of a major shift in trend reversal, In terms of this downtrend, to see a minor halt where SPY has a short-term trend reversal to fill the gap at 406.91, what would truly need to happen is it would need to break above 402.60. If you see a breakout above 402.60 and it reacts to support, you can expect a strong push up to fill the gap, right? So with all this information and all of these key levels that we have discussed so far, what is the best levels to be buying puts at? What are the best levels to be buying calls at? What are the key setups that I want you to be aware of, right? So these are going to be the key levels. In terms of puts, your best level possible for puts in terms of resistance is to wait for the gap to fill. So if you see SPY fill the gap, which is at 406.91, and you see bearish confirmations and you see a roof forming, you're going to want to be trading some puts. And if you see a bearish candlestick on the daily chart, which is not determined until the market closes. So if you're seeing a bearish candlestick forming on the daily chart and it filled the gap that day, then you're going to want to swing trade some puts, right? So there's day trading and swing trading opportunities. That would be the best trade in terms of puts. Now, in terms of the key breakdowns for puts, these are levels that I want to bring awareness to. If we fake out at $402.60 and it starts breaking down, the bears will be in full control if we can go green to red at $399.59. So if you see the green to red move happen and previous closing prices reacting as a resistance, you can try puts towards that level with a max risk of 402. So if you're seeing a green to red move, it's under 399.59. It just cracked 400. It's looking super bearish. Looks like the downtrend is going to continue and it's not going to fill the micro gap for the short-term being. Then you could try puts at the lower level. Just understand it is a lower level and it's not the best level to be trading at. It's more of a key breakdown. This is what you need to be aware of right here. This is $400. If $400 cracks and reacts as a resistance, you're looking at a big pullback. You're looking at a big pullback to 395 to 393, not much support below. So for the bears to remain in control, we just need to stay under 402 and we need to crack 400. Basically, if we could stay under 402.60, the bears will remain in control, right? Now, let's discuss bull theory. So in terms of bull theory, not too interested in buying at current levels, but if you're looking for a shift in reversal where the bulls shift the trend and it's going to start to fill the gap, if you're looking for a breakout opportunity in the middle of the channel, then what you would need is you need a push above this level right here. If you see the SPY push above 402, it breaks out, it forms a roof, it's forming solid, strong support, then you could try buying the breakout for riding it back up to fill this gap here, right? Just understand, if 402 reacts as a resistance, SPY super bearish, it's going to crack 400. If SPY cracks 400 and it goes green to red, for the most part, it is going to be over. Basically, the way I see this chart is, in order for this gap to fill and in order for there to be a shift in the trend for the bulls to take control for the short term being and to fill the gap, it needs to break above 402.60 and turn that into support. If that cannot occur, then instead of seeing this gap fill first, we will see a downtrend to the 395 to 393 zone, right? Now, let's discuss some macro levels. These are more longer term levels for some good dip buying opportunities for calls. So in terms of the best levels to be buying the dip on call options, this is a key zone of interest. Previous resistance right here, which will likely react to support when we do go back to this level at 385 to 384 for a quick scalp. These are all scalping opportunities. Another one, and this would be the best level, this is a swing trade opportunity and a day trade opportunity. So remember, if you see a bullish candlestick on the daily right before the market closes at this level, then you're going to want to swing calls. 374.13, very strong support, and there's a gap to fill below at 374, right? What makes these trades automatically better? When there's a gap to fill within the side of the favor. So if I was buying calls at 374, what would make the trade better? If there was a gap to fill within the range of my targets, right? So basically, if SPY never filled this gap at 407 and it sold off to 374 within time, that would automatically make my trade better because then it's a gap close reversal to then fill the gap above. It's a two-part strategy, but I'm not holding for the gap, right? And then the same thing here in terms of puts. If SPY filled this gap at 406.91 and then it started reacting as a reversal, that would make my trade better on the put side because then there's a gap to fill below at 374. You see how that works? So those are the best prices you could be possibly trading at. So Will, what's the best prices for trend reversals? 375 and 406.91 in terms of more micro focused, 406.91 and 374 to 375 Also, do not be a bear who gets caught up in a short-term trend reversal. If we push above 402.60, we will fill the gap. So respect stop losses if you decide to play this. For the bears to remain in control for the short-term mean, we need to stay under 402.60. We need to crack 400. 400 cracks, we go green to red. We should be on track for 395 to 393. So I explained to you how to determine and the key levels to determine if the bulls shift the trend to fill the gap. I explained to you the best level to short for the gap close reversal. I explained to you how to determine if the bears remain in control. It just needs to stay under 402.60 and it needs to crack 400 for that continued downtrend to 393, 395, right? So say I'm trading SPY tomorrow. If it's staying above previous closing price, 399.59, it's breaking above 400. It goes to 402.60. It's breaking out, it's forming support. Absolute no reason for puts. It's going to try to fill the gap and have that reversal. If 402.60 fakes out, it's forming a roof, it goes green to red, yes, then there is a reason to short the key breakdown. Just understand the risk involved in shorting the key breakdowns, right? So explain to you the overall trend direction. Right now, we're kind of in the middle of zone. So the overall zone, we're kind of in the middle right now. You could think of 400 to 402.60 in the middle. The lower end is 393 to 395. The higher end is going to be 406.90. That is what you need to be aware of in terms of another macro level. Best level for puts for the macro would be this 410.97 as well. But keep in mind this 406.91 is a phenomenal level. So those are my key levels. The levels that I will be interested in trading at for scalps heading into the rest of this week, as of now, are going to be the following. 406.91, if we reject, I get puts. 399.59, the previous closing price. If it reacts as a resistance, I look to short the key breakdown with lighter size. 402.60 is the make or break trend reversal. 402.60 is the level that states for the bulls to switch the trend to fill the gap, it needs to break out and turn to support. If they cannot do it, then it's going to try to flip. It's going to try to flip green to red. Right? Once it flips red and reacts as resistance, then it's truly bearish for the move to 395, 393. So my three main levels right now are going to be 406.91, 402.60, 399.59, and I'm also looking at 393. Now, in terms of our more macro and longer term levels, $410.97, 385 to 384, and 375. Those are all my key make or break levels. If I see a bullish confirmation support at those lower levels, I look to scalp calls very quickly in and out with at the money strikes close to expiration, not holding very long. If I see bearish reactions and a roof forming, not a floor, a roof, right? So the floor is for calls, the roof, bearish resistance, bearish confirmations, whatever it is that you use to determine if something's bearish or bullish, along with the key levels that I'm sharing with you. I mainly use the candlesticks. I do have some indicators such as the tweets and stuff like that, but it's mainly based off of price action and the candlesticks to determine if it's a roof, determine it's forming lower highs, determine if it's a support, determine it's forming higher support, stuff like that. Very simple price action chart analysis, mainly trading the chart, right? With these candlesticks in terms of the 1 minute chart, the 5 minute chart, 30-minute chart, stuff like that. So those are the key levels that I'll be trading at. And I'm looking forward to it. There's going to be a phenomenal trading opportunity setting up. So be prepared for it. For those of you who are interested in joining Trader Society, you can stay tuned for that. Towards the end of December, we are going to be relaunching Trader Society, reopening up the program so people who do want to join, because it has been closed for a couple months, still been delivering within Trader Society. But we haven't been open to the public. We've been focused on members and stuff like that. But yeah, we're going to be launching new programs as well fairly soon towards the end of December. So make sure you subscribe and stay tuned for the channel for that. I will see you guys within the next video, and peace.